And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud host of the ABSA Champagne in Africa Festival 2024. ABSA is an authorized FSP and registered credit provider. Good evening. Welcome to the program. I'm Stephen Grootes, fascinated by the developments tonight around Dondo, Mogajane. It was 3, 4, 5, 6, 7, some time ago, 2-3 months ago, in fact, that Tefua Matodzi, former chair of the VBS Bank, he said in an affidavit that he had met with Dondo Mogajane and offered him R1 million as a bribe. He claimed that the money had been passed over. Mogajane at the time denied it. And we still now, months later, have Mogajane resigning as the CEO of the Morty Group and as chair of the Government Employee Pension Fund, also from his position at the BRICS Bank. And we did ask Dondo Mogajane if he would talk to us this evening. I suppose the question I would ask him, were he to come on, apart from why now, would be, and I must reiterate that he denies wrongdoing, I suppose the question would be, do you know that something is coming? I mean, we've watched the NPA investigate. We've watched various investigations. We've seen Matodzi now serving time, of course. He is a convicted fraudster and felon. But are you expecting something to come, I suppose, Mr. Mogajane, would be the question. Still time. Mr. Mogajane, you've been on the program. You and I have spoken before. 011-883-0702, 021-446-0567. But it would be good to hear from you, and our producers have reached out. It would be wonderful if we could hear from you. We'll have more on this in just a moment. Fascinating story about Fly Safair this morning, suggesting that one of our regulators in the aviation space has said that they are not substantially South African owned. And the legislation goes back, I think, to the 1990s. As I understand it, around 75% of an airline operating in South Africa has to be owned by South Africans. Now, when the law was written 30 years ago, it might have made sense. That's how the world was at the time. I don't know if the aviation industry is like that now. And I must just say, though, I can see an argument. People will say, look, local is lekker. We have to actually keep South African assets and planes flying in South Africa. We have to keep them South African owned. But do we? I mean, really? I mean, hasn't a lot changed? I mean, do you care where your car is made? Do you care if the airline works, if it makes a profit, if it employs South Africans, if it's BE compliant? I mean, what more do you need? I don't know if we need any more. And I suspect, I have a horrible feeling that this is going to go the way of the lawyers, by which I mean there's going to be an argument over who owns which share, who controls which trust, and how all of that works. And I think it's going to get very technical very quickly in that kind of horrible legalistic way. Still, the question does matter. Does it matter, and I've asked this before on this show, does it matter where something is from? If you don't know where your car was actually made, I mean, does it matter to you where, and you know that the aeroplane that you're flying on wasn't made here? Does it matter who owns it, really? And then Sandile Zungu, he'll be talking to you about his money, my money, from 7:30 this evening. A fascinating person. I followed him for many years, first as a political reporter for EWN. He was then, and I think still is, president of the Black Business Council. And one of the things that he did was that he lobbied in the ANC for a Ministry of Small Business Development. And I remember saying at the time, this is important because it was the first time a business lobby group had actually got what they wanted from the ANC. It was crucially important. We're talking about 2012 now, some time ago. I suppose one of the questions I'll have for you tonight, Sandile, when we speak, and I'm looking forward to it in an hour and 20 minutes' time, is, are you happy with the way the ministry has run? I'm not sure that the ministry has actually done much for small business at all. And I'm sorry to say that because I think we need to do it. I mean, you know how often we talk about small business, but I don't know if it's really done what we wanted. We'll ask him if he got what he wanted with the Ministry of Small Business Development. Good to hear from you this evening. Voice notes as well on 072-702-1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, the statement out this afternoon by the former Director General at the National Treasury, Dondo Mogajane, stepping down as CEO of the Morty Group, as chair of the Government Employees Pension Fund, and from his role at the BRICS Bank. Mogajane says it's a temporary measure to deal with the claims against him involving the collapse of the VBS Mutual Bank. And you may remember a former chair of the bank, Tefua Matodzi, has said in an affidavit he paid Mogajane R1 million. Mogajane was also DG at the Treasury, though, when the Treasury issued that circular telling councils they could not invest with VBS because it was a mutual bank, and that circular, in turn, led to the bank's collapse. And to put it another way, it stopped the flow of money which kind of by then had already been stolen. Tim Cohen is the editor-at-large at Daily Maverick, as you know, a man of immense experience in the business world. Tim, good evening to you. So these claims against Dondo Mogajane first came to light a couple of months ago. Mogajane said he's done nothing wrong. He's reiterated doing nothing wrong. Now he stepped aside. Isn't the timing quite strange here?
Hi, Stephen. Yeah, I think it is kind of odd. I mean, his position has always been, he's categorically denied that he ever accepted any bribes. There was, it does appear that no money actually found its way into his, personal accounts. So his point of view, his point was, well, let the legal process take its course. If necessary, I'll stand down later if there's something, substantial. But he didn't at first intend to stand down. But obviously, I would guess some kind of pressure has been put on him. It is an extraordinarily responsible position to be the chair of the Government Employees Pension Fund. This sort of huge, enormous financial treasure chest. So my guess is that he has stood on reluctantly.
I suppose then if you have to step down from one, you have to step down from the other, don't you? If you step down as chair of the Government Employees Pension Fund, well, you have to go from the BRICS Bank, and then in turn you would be asked, well, why are you staying on as CEO of the Motti Group?
Yeah, no, exactly. And my suspicion also is that, part of South Africa trying to clean up its act for the FAFT, in the FAFT negotiations, what the FAFT want to see is that South Africa is actually taking action. It's not, simply, putting measures in place that act from here on. It wants to see action against the people who are suspected of taking part in illegal financial transactions, and this is a serious allegation made by, in a court case, by somebody who has pleaded guilty. So that's pretty serious, I think.
On the other side, there's the sort of alleged transaction. Mogajane received money to defend VBS. And you make the point, Tim, quite correctly, that from what I can see, there's no absolute proof that he did receive that money. Did he really defend VBS that much? Wasn't he in a very key decision-making position? If I remember my timeline correctly, and a lot was happening at the Treasury at the time, you will remember it better than I do. But wasn't he DG when that circular was issued? And that would suggest he didn't really defend VBS that much.
No, well, that's a point that he made. But you've got to be very careful about the timeline here, because I think he made that. That was the law for a start. So he was just articulating the law. And then VBS. It became clear that VBS was in trouble. And then the meeting, the alleged meetings between him and Matodzi took place after that. And the question was, wasn't it possible to give VBS time to adhere to the regulations, and how much time should they be given? And was it possible to change the regulations to allow them to carry on? All of those sorts of questions had come up, and that's what VBS was trying to do at the time, and that's what they were trying to the negotiations that they were trying to pull Mogajane into.
Tim Cohen, thank you so much. Editor-at-large at Daily Maverick, as a man, as you know, who's been following the business world in South Africa for many, many years. 17 minutes after 6.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, confirmation today that our International Air Services Council has ruled that FlySafair's shareholding structure is illegal. It seems the majority of its shares are held by foreign nationals. Under our law, as it currently stands, an airline operating in our domestic space must be, I think the legal word that is used is substantially held by South African citizens. It seems that ASL Aviation owns nearly 75% of FlySafair, and that's technically a foreign company. I get a sense their shareholding might be a little bit more complicated than that. Guy Leach is the editor at SA Flyer magazine. Guy, good evening. This started as a series of complaints from the owners of Airlink and Global Aviation Lift. Do they have a strong case? I mean, it does look on the face of it that FlySafair is not substantially owned by South Africans.
Yeah, hi, Stephen, and nice to be with you as always. Well, yes, indeed. These are sort of important but background in issues that just sort of keep bubbling away. Every 10 years or so, this thing flares up. In fact, it started at the launch of FlySafair when, at that stage, Comair argued that FlySafair wasn't 75% owned. And in fact, that phraseology of substantially domestically owned is now actually taken to mean a maximum of a 25% foreign ownership. So that's the measure that we're using at this stage. And SAFAIR, in terms of the International Air Services Licensing Council, has fallen clearly short on that. But of course, the devil is in the detail. What we're actually seeing here is a trust structure. And the question is, well, if the trust is in South Africa, does that make it a South African trust? And in previous examples, particularly with Comair about 7 or 8 years ago, it was deemed that a South African trust was okay. This time around, it's not, because the beneficial ownership of the trust suddenly becomes largely Irish. And this is important. I mean, it might sound all terrifically technical, but it's of immense importance to the South African airline industry. I mean, just 3-4 months ago, we saw the final long-awaited announcement of Qatar buying a 25% stake in Airlink. They would have bought a lot more if they could have, because it's a great little airline, a great little investment. But they've stuck to the 25% rule. And the real problem here is that it limits foreign investment and the recapitalization of airlines. SAA would, I think, probably also love to see a foreign owner with perhaps 49 or 50% ownership.
Fascinating that Airlink aren't the ones complaining here, isn't it?
No,
they did, actually.
No, yeah, so it was Airlink and Lyft that complained this time.
All right, my mistake.
Yeah.
I mean, do we need a law like this? I mean, from what you say, you seem to be heading that actually maybe it should be changed. It would bring more money into our industry.
There's a good argument to say that we don't need a law like that, and indeed we don't need one as restrictive as 25%. Most countries have a 50% limit on foreign ownership, so we could quite easily move up there. There are reasons for it. One of the reasons is that you don't want to export the entire revenue of the airline to a foreign shareholder. Another is you need to be able to keep a South African airline responsible and accountable in South Africa. These are reasonable reasons, I suppose. But in this day and age, honestly, it makes more sense to just have airline ownership from whoever's prepared to invest the capital.
Could they really shut down FlySafair over this? I mean, I can't imagine. I mean, look, firstly, you and I both know it's going to be in court for years. But, I mean, what would the sanction be?
Yeah, I know that working or decide on some remedy. Yeah, I hate the airline.
Aye. Guy Leach, we're losing you there. I'm just going to hope that line does come back and put the question to you again, because we completely lost that answer. All right, Guy, let me try again. So, I mean, would they shut down FlySafair over this? That seems amazing.
I don't think they will shut it down just before Christmas. I suspect they'll have absolutely final notice to rectify the shareholding. And that's my hope of what will happen. But they've got 20 working days before we hear the outcome, so I think we just need to keep our fingers crossed. Obviously, we'll hate to lose that air as now the biggest carrier in the South African market right before Christmas.
Guy Leach, thanks very much indeed. We'll leave it there. Editor at SA Flyer magazine. I'll ask the question again. Do you really mind who owns the airline that you're flying in? Does it ever cross your mind to even think about it? 22 minutes after 6.
The Money Show.
The Markets.
Peter Brook is Portfolio Manager at the Old Mutual Investment Group. Peter, good evening to you. Obviously, if you look at foreign markets, and particularly the US, everyone's caught up in that little election that starts tomorrow.
I think that's right. We're all sort of looking at the plug hole and wondering which way it's going to go. I think big impacts in terms of our markets coming from that is the markets have basically been pricing in a Donald Trump victory, which was leading to a stronger dollar and much weaker US bonds. And some of the surveys over the weekend interjected some doubt into that. We've always thought it was more of a 50-50, but markets had started to price too far. So we saw a bit of a reversal of that. So we had a weaker dollar. We had stronger US bonds. Let me give you an example. The long-dated US bond, which is your sort of 30-year, it's up 2% today. So it's quite a big move for bonds. And then we saw gold and platinum shares off. So very much a reversal of some of the trends that we've been seeing more recently.
Is that all because markets now think it may not be Trump? I mean, markets like the rest of us don't really know.
It's always been, I mean, if you look at the surveys, it's very much looked like 50-50, but the markets have started to trade a narrative. And that was improving Trump momentum, that he was going to take it, and has started to price that in. I felt that that was priced in more than reality. And we had a couple of interesting surveys in terms of the elections coming out, which showed a more balanced approach. And so that was a reversal. I think it's largely noise. There's a lot of money flowing around on this at the moment.
There's also quite a lot of political action in China, as I understand it. There's sort of top brass of I think it's the Chinese Communist Party having a big meeting. That's the other sort of big geopolitical event of the week so far.
It's a huge week if you think about it. We've got U.S. results coming out. We've got U.S. election. We've got the Chinese Communist Party. And so this is really sort of affirming what level of support are they going to give to the Chinese economy and the Chinese market, coming out with sort of the more granular detail. And because China is actually, I mean, China's in deflation at the moment. We saw a spike in Chinese equity markets on these announcements, but the big element is, do they continue, and is that going to be enough to help the world come out of its sort of low growth funk? If you look at some of the resources, and particularly shares that have been impacted are the luxury goods, where you've got terrible numbers coming through.
I mean, it's one of those weeks where the world could actually be a very different place come Friday.
Definitely.
Here at home, a couple of corporate results. Ultron, their core profit up by 95%. Revenue down slightly, but they have sort of changed the group. They sold their ATM business. The market seemed to like it.
Yeah, the share was up 3.2%, and it's been a big winner over the course of, well, it's actually been since it's been a massive recovery story. It's done more than 10 times from its lows, but it's definitely been strong over the last year. I think the main focus for me would be on its platforms. And when I'm talking platforms, think Netstar. So there was a very strong growth in operating profits, 45% up. Customers are clearly happy because they've had a 21% increase in subscribers. And those platform businesses are much more annuity type income, which is a more solid base. And it looks like they're doing well in that space.
And then Redefine Properties had a 3% decline in their distributable income per share. They say they're feeling confident about the future, but I suppose the question, as it has been since COVID, comes back to office supply.
If you look at the market reaction to Redefine, it was up 0.8%. It was a fairly neutral result because generally property shares were up on the day because of the lower global bond yields. So I think it was a solid outcome, very much in line with expectations. And what's important is some of the background data behind those numbers. So in property, you have something called reversions. And I'll just try and explain what that is briefly. When you do a property lease, you might have a 5-year lease or a 7-year lease, and you have an escalation. So you're paying rent at 100 Rand a square meter, and then every year it goes up by 6%. And when you come to the end of that lease, it's what does that lease go back to? And what was happening with the property companies had very big negative reversions, where the rates, where rentals were being cut by 30-40% when they were being renewed. Now what we're seeing in Redefine's results is that reversions are sort of stabilizing. So that's the first positive. It says we passed the trough in the cycle and are probably bottoming and getting better. And the other element that was positive in their numbers was that the operating margin improved a little bit. and that was due to a decrease in the electricity bill. Now, that's got two elements to it. One is with better electricity supply, they're using less generators, which is obviously cheaper. But the other is more solar, which rooftop solar onto a shopping center has an excellent return, somewhere around 20%, when you're not using the batteries for storage. So this is a good theme for South Africa in terms of better electricity supply, helping profits and helping everyone.
Peter Brook, thank you very much indeed. Really appreciate it. Portfolio Manager at the Old Mutual Investment Group. You're with The Money Show, just gone 6:30.
The Money Show with Stephen Crotters is brought to you by ABSA CIB, proud host of the ABSA Champagne in Africa Festival 2024. ABSA is an authorized FSP and registered credit provider.
16 minutes now to 7 the time. Redefine Properties announcing today nearly 3% decline in its distributable income per share. Also saying it's feeling more confident about the future because of the changes in the environment. The company confirming its South African occupancy level, just over 92%. Its occupancy level in Poland, where it also operates, is 99.1%. Andrew Koenig is the CEO at Redefine Properties. Andrew, good evening to you. Thanks for your time on the Money Show this evening. A 3% decline in distributable income per share. How would you describe the year? Seems like it's been pretty tough.
Good evening, Stephen, and to your listeners. 2024 hasn't been an easy year, Stephen, but by comparison to prior years, it's actually been quite a good year. Our property fundamentals from a metrics point of view are all either stable or improving, albeit off a low base. And we are starting to see the property cycle starting to turn now, Stephen, as a consequence of the easing interest rates that have happened subsequent to year-end, along with rising confidence that has been building during the course of 2024.
Are your reversions stabilizing? In other words, more of your clients, are they staying with you when their contracts end and you don't have to give them a lower rent so that they stay?
So, Stephen, in a market where there is not an abundance of new tenants, especially in the office market, we do everything possible to retain our tenants. So we've got a retention level of circa 90%. But on the renewal reversions, and these are rentals that come up for renegotiation, we are starting to see a stabilization of that metric. It has been negative for quite a while now, since the pandemic, but we are actually making inroads into it in that our retail sector is now positive. Last year it was minus 4%. It's currently just over 0% positive. And our industrial portfolio is doing very well, where we have a 5.5% positive reversion compared to 2% last year. Offices remain under pressure, Stephen, and this is mainly because of, an oversupply in the office market, which requires economic growth to work off when we're talking about growth of circa 3% on a sustained basis.
I mean, if oversupply of office market if the office market is that oversupplied, the only other option is to actually cut the supply, turn that property into something else.
Stephen, where it's possible, we've done so. Conversion opportunities are site specific, and it depends on layouts of floor plates, location as well, and then clearly also the cost of conversion really means that you have to have a starting price of the building that is cheap. And clearly we've got some, pretty decent offices. 95% of our portfolio is in the P to A grade. So we're not really, struggling for tenants. It's more the market rentals that are under a huge amount of pressure.
Is it
given the challenges? Sure.
Is it a Gauteng problem?
Mostly, yes, Stephen. If you look at the Western Cape, we're doing very well. We're virtually fully let at that in the Western Cape, mainly as a consequence of business process outsourcing that has been very prevalent down there. There's been a big move out of the Philippines into the Western Cape region. So it is here in Johannesburg and Pretoria where we are taking the strain.
So you're talking about companies that used to have their operations in the Philippines. I mean, are you talking call centers? Are you talking something else that have moved to Cape Town?
Call center, Stephen. Yes.
Okay. There are other things around all of this. I mean, some of your costs were electricity, and I'd imagine that was a major problem for you during intense load shedding. How has that changed? We've had no load shedding, and I imagine you have a lot more solar than you used to have.
Absolutely. Stephen, if you look, 18% of our retail portfolio enjoys solar-generated electricity, and we're continuing to expand that. So we've got a further 18,000 kilowatts that we are expanding at the moment, which will take us up to about 62,000 kilowatts in total, which represents a big chunk of our electricity consumption. As a portfolio overall, it translates into roughly 13%. We're also looking at purchase power agreements from, green sources of energy or power producers out there, and that will take up that consumption from other sources other than Eskom by a further 8%. So we're knocking on the door of about 20% in due course.
I mean, I presume at many of these properties you'd have solar and possibly a generator because you would have had the generator first.
Yes, absolutely. Look, Stephen, without generators, we would never have coped with the load shedding that we had experienced up to the 26th of March. So all our buildings have got that capacity, and we see that as necessary backup.
You talk about your optimism for the future, and I suppose it's the usual reasons. There's interest rates and maybe the coalition. Andrew?
Sorry, Stephen, I lost you there.
Sure. I was talking about, you talk about optimism for the future, and I suppose that's for what everyone else is saying at the moment. Lower interest rates, particularly in your space, and then maybe also the coalition?
Yes, Stephen, look, commercial real estate really relies upon confidence and interest rates that are friendly. Now, with these two working in tandem, we do see an upward property cycle emerging out of a very prolonged trough.
Okay. And then obviously it would take quite a long time to shake out the impact of high interest rates. I mean, are you expecting a big change in the next 12 months?
Stephen, it will be gradual. I don't think we'll see, we saw interest rates go up very steeply. I think we're in for a gradual decline in interest rates. So it's going to take 2 or so years to revert back to the norm, which is around about a 7% repo rate. So we're not hitching our fortunes to interest rate reductions alone. We're looking at efficiencies within our business and spotting the opportunity within every challenge rather than relying on a rising tide to turn our fortunes.
Andrew Koenig, thank you very much indeed. CEO at Redefine Properties. And the property space is just still very, very interesting at the moment. Still very difficult space, as you can tell. In a moment, Werner Kapp, the CEO at Eltron.
The Money Show
with Stephen Grootes.
Good to hear from you this evening on 011 883 0702 021 446 0567. I don't know if you have a view on the decision by Dondo Mogajane to resign from his positions. He's still saying, of course, he's done nothing wrong around VBS. I do wonder what the next turn in that story will be. Well, the ICT group Eltron confirming today core profit up by 95% to just over 900 million rand in the 6 months to the end of August. Although its revenue fell by 2%, it did sell its ATM business, and that was one of the reasons, I presume. One of the key numbers in their results is that Netstar increased its connected devices by 26%, subscribers up on the back of that by 21%. Werner Kapp is the CEO at Eltron. Werner, good evening to you. So some changes to your group recently, the sale of the ATM business, the move to use 3 operating platforms. I mean, a year of real change for you.
Hi, Stephen. Thanks for having me. Yeah, absolutely. I think it's really part of a strategy that we've got to be the leading platform in IT services business. So we wanted to make sure that the businesses that are within that are really the businesses that are in high growth markets where we think we've got great solutions and platforms that can differentiate ourselves. And that really led to the decision to dispose of the ATM business, which actually happened about a year ago already.
No, sure. And I mean, I presume from your results, you have the 3 operating platforms. I think that was March, April. Clearly, that move is benefiting your company, it would seem, at this stage.
Yeah, it's really been great for us, Stephen. I mean, touch wood. I think this execution of this strategy has really driven sustained positive momentum for us. As you said, from a profitability perspective, this focus on profitable revenue growth, high margin annuity revenue has delivered significant double-digit EBITDA and profit growth. I think you even referred to it early on, and I think the really nice thing is that you're getting that scaling up benefit in that. So these platform businesses are really gaining scale. You spoke about this 21% increase in subscribers in Netstar, and that's really giving us scale, and it really fuels a flywheel effect for us. And then you're starting to see that go through in the earnings. And it's also giving us the opportunity to actually upgrade our targeted operating profit guidance for FY26.
Why are the Netstar numbers up so strongly? I mean, is it a fear of crime, a response to crime?
I think it's a combination of a couple of stuff. We've really grown market share and step turn in that business. I think we put some really good operational efficiencies into the business, and I think what we're also doing is building out our big data as a service. There, we launched this global fleet bureau in January of this year, and what that does is it's really providing sort of managed services to these big, large fleet logistics companies. So I think it's a combination of absolutely responding to the trend of also, by the way, not just crime, but also protecting assets. So what we're finding is that, as valuable as the cargo is that we're protecting, it's also the assets that we're protecting. And then I think really, growth in that large enterprise segment.
Sure. I mean, I would imagine there's still a huge market for growth here. I think there are 11 million cars in South Africa. You have around 1.9 million subscribers. You do have competition in the market, Werner, but I mean, there could still be growth for you here is the point.
We absolutely believe that the South African market is not ex-growth. Yeah, Stephen, we think there is still opportunities for us to grow that business and gain market share both in the consumer and in that enterprise market.
The ICT industry is changing. I mean, look, you're the CEO in an industry that's always moved very quickly. Everyone's talking about artificial intelligence all the time. I'm presuming that's going to make big changes to your business or your business practices at some point. Are you trying to innovate against that, I suppose? What I'm trying to say is you're trying to make sure that someone who uses AI better than you do doesn't come along and take your business.
Absolutely. There's of course, a massive market hype around AI. I mean, we've seen some of the, incredible numbers come through from, the so-called Magnificent Seven, not just in earnings, but I don't know if you've seen the kind of numbers they're talking about, what they're spending and the investments that they're making in artificial intelligence. I guess to answer your question, we really see it as an opportunity. I mean, we kind of deployed AI in numerous parts of our business, and we were in a number of discussions with customers about deploying AI in their businesses, to assist them to help drive their business going forward. I mean, just to give you a couple of examples around that, and which is where I also think the strength of our platform businesses and the sort of data that it generates come in, and some of the amazing stuff that AI can do for you. I mean, for example, we're helping with the grey listing of South Africa. Our Alton Digital business, historically, it took the customer, over 10 hours to manually reconcile bank statements. Using artificial intelligence, we now do that instantaneously, and of course, error rates go down significantly. I think another example, you touch on the Netstar business, and all the cars that we've got data on. So we work with marketing agencies to really give them pinpoint information of where exactly to advise their customers, as an example, on outdoor advertising. So it's a very interesting space, and I think there's opportunities everywhere.
I mean, your main sort of competitors, I presume, are mostly South African, but some of what you do could be done by other people in other parts of the world. In other words, your industry is very vulnerable to kind of competition from everywhere because of the geography of your industry. Does that concern you?
Look, I think as a CEO, everything concerns me, when it comes to our competitive position as a company. But interestingly enough, I think it's a significant opportunity. I understand where your question comes from, but I think it's a significant opportunity for us, because what we're finding is that, large South African corporate customers, state-owned entities, national government departments that we deal with, they want to deal with companies that are headquartered in South Africa, but leverage the best of global technology, which is where we think we really position ourselves. And then, in things like data privacy, the protection and localizing data is also becoming a really big issue. And that's where we think we're busy carving out a really good space for us and being able to provide world-class technology solutions in South Africa by a South African company.
It does make sense, Werner Kapp. Thank you very much indeed. CEO at Eltron on The Money Show this evening.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
Well, I don't know if you have a particular insight on who's going to win the American elections. What everyone everywhere is talking about. Everywhere you go, someone will stop you and say, do you know who's going to win? I'll give you my answer. No. And I suppose one of the big questions is, what's it going to mean for you? And what that really boils down to is trade policy to an extent. Also, of course, what happens. And trade policy moves in so many different directions. I've made this point before that when it comes to international trade policy, it's a bit like quantum mechanics because the targets all move all the time. Yes, you can raise the price of chicken. Yes, you can put a tariff there. Yes, you can protect South African jobs and protect South African industry. And yes, you at the same time will be putting up the cost of protein for people in South Africa. The point I'm trying to get to is Donald Trump might be the next president of the United States. And if you look at some of what he's promised, it could be very, very scary for us. We'll speak to Donald McKay about it, an expert on the subject, in just a moment. That to come. Don't forget Sandile Zungu from 7:30, My Money. You're with The Money Show, 7 o'clock.
And now, The Money Show.
With Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud host of the ABSA Champagne in Africa Festival 2024. ABSA is an authorized FSB and registered credit provider. Good evening. Welcome to the second hour of The Money Show. I'm Stephen Grootes. Good to hear from you this evening. So much to talk about as always. Your questions also for Sandile Zungu. He, of course, will be the person talking about My Money from 7:30 this evening. We'll ask him a little bit about Amazulu. I'm also very interested in his view on the performance of the Ministry of Small Business Development. The ministry, he can talk about the minister too if he wants. I don't think that he will, but very interesting just to see how that plays out. So looking forward to that from 7:30 this evening. Also, don't forget tonight, we'll be looking at books this evening. There's a book called Contagious Generosity. Very interested in what that is about. That coming up. And in a moment, more about the possible future re-election of Donald Trump.
702.
702.
Stephen is on X.
At Stephen Grootes.
Well, I presume by this time tomorrow there'll be queues around the block at most voting stations in the US. Early voting has become more of a thing in the US. I think over 75 million people have now already voted in that election. So there's going to be a huge poll, a huge turnout, and still no indication, unless you know something I don't, of who's actually going to win it. And as you know, so much hinges on who wins, maybe on how they win as well. And I'm talking there about control of Congress, control of the House, and control of the US Senate. Donald McKay is the CEO at XA Global Trade Advisors. He's been looking at what would happen if Trump wins from a trade point of view. As you know, he's an expert on the issue. Donald, good evening, and thanks for your time. I really do appreciate it. So, on one level, it's kind of hard to know what will happen if Donald Trump wins, but he has kind of said what he will do. And if he does what he says he will do, what kind of trading policy would we be looking at from the United States?
Sure. Good evening, Stephen. Look, it would be really interesting. Might be one way to describe it. He has threatened to impose duties of 20% on all of the world for goods entering the US, and then isolating China and threatening to impose a 60% duty. It's very kind of hard to conceive of what would happen because we've never really seen anything like that. But were he to do that, I think it's fair to say we do risk pushing most of the world into some kind of recession. It would be a very bad day indeed for everyone, including the US, I would think.
I mean, it'd be the Great Depression all over again.
Yeah, I think so. And in fact, it's ironic because in 1930, the Smoot-Hawley Act was passed, and that attempted to do something very similar to this. And most economists who study that era agree that extended the period of the Depression. So, yeah, no reason to think it would be any different this time around.
The first consequence would be inflation, right? And strangely, in the US, this is also a sort of cost of living election. But that would be the first thing that would happen, surely, is that inflation would go through the roof.
Yeah, you'd have to think that. For some reason, a large portion of the voting public doesn't seem to believe that would happen. Perhaps not helped by the fact that Trump has been saying that the exporters, the Chinese, for example, are the ones footing the bill for the duties. But of course, that absolutely isn't the case. And as with all import duties, they're funded ultimately by the consumer. It's also not clear that the US has even close to the ability to localize the kind of production that would have to be localized if you took China out of the market. In fact, China, being the world's largest producer of just about everything, is going to be very, very difficult to remove from global trade. So, no, I don't see how it would happen.
Okay, so let's presume then that maybe that doesn't happen, or let's just put that into the gosh, we hope it doesn't happen box, and look at what is, I suppose, probably more likely is some kind of tariff or escalation of tariffs or escalation of a trade war with China. So I imagine the first move would probably be some quite hawkish rhetoric from Trump. He would say certain things, and then at some point, depending on how much support he had in the Senate and the House, he would impose some kind of tariff regime on China, and I presume China would have to respond.
Yeah, so I think that's pretty much the playbook, a more realistic version. Yeah, so I do think something to that effect would happen, but in fact, it hasn't entirely stopped happening through the era of Biden. So Trump began the whole trade war process, but under Biden, the situation certainly didn't get any better. We've now seen duties on electric vehicles, for example. So certainly that has escalated, but I have to think, just because of how belligerent Trump is, that would become a lot more aggressive. So, yeah, I do think so. And China would almost certainly retaliate. And that would just be, again, bad for everyone.
What does it do for us? I mean, we're not the United States or China, but I can't help but feel that the repercussions for global trade will move in many directions. Everyone would be affected just by, I presume, I'm asking, just by a trade war between the US and China?
Yeah, I mean, depending just how out of control that gets. But if you take just the issue of electric cars, for example, I have to think one of the side effects of the duties that both the US, Europe are busy imposing would probably mean that electric vehicles ironically become cheaper elsewhere in the world. China is not going to suddenly shut down all of their factories. So I presume that a lot of those vehicles will go looking for another home. And because China has such large subsidies in that space, the companies involved will take quite a long time to feel the pain that a normal business which was not supported would feel. So my instinct is that on products like electric vehicles, for example, the rest of the world would simply find their markets awash with cheap electric vehicles, which might be our way to drive up electric vehicle consumption.
Okay, so Trump comes into office, and we don't know if he will do what he says he will do, although, I mean, normally we judge people by what they say they'll do. But either way, we don't know what he does, what he's going to do. But just that unpredictability. So say for a week, nothing happens. But I'd imagine still if you're managing trade for China or you're, in the DTI here or whatever, you're going to be on edge all the time. And then there would be some, imagine, slight or something, and Trump would say, well, now we're going to put a tariff on this or on this country or on this good. Where I'm heading with this is how big a problem, even if Trump doesn't do everything you and I have discussed, is the possibility that he could.
Yeah, so Trump has this really transactional way of dealing with everybody, including businesses in his own country and countries abroad. That is a real problem. So you're in a position where you kind of have the largest economy in the world who has a perpetual threat against you at all times if you in some way upset him. So I think, I don't think that's just not a good situation to be in. You can't kind of have healthy diplomatic relationships if saying something is going to upset the emperor and he's going to do something horrible to you. And that's a little bit how the trade policy space feels to me if Trump comes in for a second time.
Nothing we can do about it as South Africa. I mean, we're just going to have to live with it one way or another. We can't even prepare for it, really, because we don't know what will happen.
No, Trump is such an incredibly unpredictable person. I'm not sure what anyone can do right now. We hope that he doesn't go completely hog wild. But if he does, we just kind of have to deal with it at the time. I don't think there's a huge amount of preparation. But, of course, this does place issues like AGOA at risk. And even programs like PEPFAR might come under fire. So certainly we do need to have a look and see what happens. But I certainly don't know with any certainty what he will do if he does win.
And we forget how important PEPFAR is. I mean, it plays such an important role in helping our government to afford HIV and ARV drugs, among other things. Kamala Harris wins, possibly. and she comes back in. What do we expect from the Democrats? I mean, it's not exactly as if they haven't played this game a little bit themselves.
Yeah, so I think it should be less aggressive, and that in itself is a win. But their policies are not really that far apart. Both of them are quite inwardly focused at the moment, and that's not uniquely American. The whole world is turning inward, and we're certainly looking at what could become a de-globalization trend. I've no reason to think the Democrats would be any different, in part because of the tensions with China, and I think the fears of a technology war, which is perhaps underpinning a lot of the trade war fears. But the effect of all of that is increased use of aggressive subsidies, tariffs, and a whole host of other things. And nothing makes me think Harris would be different, although I think she'd be more measured.
Donald Mackay, thank you very much indeed. Good to hear from you, CEO at XA Global Trade Advisors. Well, I hope you get some good sleep tonight after listening to that. 17 minutes after 7.
The Money Show.
Business books.
Well, I suppose from Donald Trump to human generosity. I don't know how much faith you have in human generosity nowadays. I know we live in an era where social media and kind of everything else kind of pushes you not to be generous. I think the idea of being generous has had quite a tough time in recent years. Well, someone's written a book maybe to oppose all of that. It's called Contagious Generosity. It's by Chris Anderson. He's actually the person who curates TED Talks. And if you spent any time online, I'm sure you'll have seen some of them. They've kind of taken the world by storm over the last 20 years. Ian Mance, MD at Gateways Business Consultants. He's been looking at it. He does our book reviews for us. Ian, thanks for coming in. Contagious generosity. What is contagious generosity?
I think what we learned from COVID is that you don't have to be big or powerful to have a huge effect.
Yeah.
You can be very small. And what's happened is that with time, we've got facilities now that allow us to be much, much more effective, and it's the internet, than we've ever been able to do before. Let me just give you a quick example. The book is full of fantastic examples, but they all illustrate something different, and this one illustrates the central point. You're driving down the street, and the bucket's down in rain. And on the sidewalk, you see somebody being pushed in a wheelchair, and they're in the rain. A man stops his car, jumps out of his car, and runs over to them with an umbrella, and then gets back into his car. Now, before the internet, that's not that long ago, there are 3 people who would have known about that.
Yeah.
Him and the other 2. But it went on to video, and it was shown around all over. I think that they got something like 5 million people viewed it, and there were about 90,000 people on Reddit who were impressed by it. And people came up with things like, that gives me hope. I'd like to be like that. I'm going to carry an extra umbrella with me. If he can do it, I can do it too. And I think that if we can combine these 2 things together, the internet and generosity, there may be something that can come out of it which is very, very good. Chris Anderson, as you said, is from TED. TED is a very expensive conference.
Yeah.
And they when he said that he's going to give TED away, people thought he was insane. He's a very good businessman, by the way. He's done very well. But before that, that's how you can invest in TED. But what he did was he said, I'm going to give everything away free. So you can watch all the TED Talks you want, absolutely free. What happened was that it inspired more people to come to the conference, and they made more money than they ever made before.
Sure.
So that's the positive side of it. The idea of what TED can do for you is quite extraordinary. I think it's best illustrated by this. One of the early people who gave a TED Talk was Sir Ken Robertson. He was an expert on education and other matters. And when he gave his talk, live talk, 500 people saw it. 17 years later, they get on average 5,000 views of that particular TED Talk every day.
Sure.
So it's extraordinary. And one of the people that the author met was, 2 Indian women. One of them said her friend said she must watch the TED Talk. So she did. And she was so inspired by the TED Talk, she said, we've got to make a difference in education in India, but not just for a few people, for the next generation. And what she started doing was she started putting credible people who you can relate, credible and relatable, talking about things that they've done. And these things come out, and they're inspiring talks.
Yeah.
They call them Josh talks. At the moment, 50,000 Josh talks are watched every month.
Sure.
Sorry, excuse me, 50 million. We're talking about India,
Sure.
so it has to be million. 50 million Josh talks are, and it's now been translated into 10 languages. So this woman's inspiration from one talk, a TED talk, which you heard via a friend, has caused this incredible spur of generously sharing knowledge with other people. And there are many other examples. During COVID, I think the artists really suffered most.
Yeah.
And an artist called Matthew Burrows, he's also an entrepreneur, decided to set up a hashtag called Artist Support Pledge. And he said, what you do is put your stuff on Instagram, and if anybody buys it, you must sell it for less than £200. And when you get up to selling £1,000, you are obliged by the pledge to go and buy at least one 200 pound piece from a friend. Well, it sounds like a nice little thing to do, and it was very helpful, except that it's raised 70 million British pounds.
Sure.
That's 1.6 billion rand by doing those acts. And there's all of these. What's most interesting about the book is they also bring in a lot of science.
So I suppose, sorry to interrupt you. I mean, the logic is that generosity leads to generosity.
It does.
One small act of kindness, as the saying goes, can lead to others.
Now more than ever before, and only because of social media and internet. One of the people in TED community, they call it, made a ton of money in an investment and decided to give $2 million away. But instead of just giving $2 million to a charity, the idea was that they wanted to find some way of doing it properly. So they went to this professor called Elizabeth Dunn. She teaches in British Columbia. And they asked her what they could do. And they produced a beautiful experiment. The experiment went like this. They asked people to participate in a study. They said it may take a lot of time. It will be worth it. And it may be personally challenging. They got about 2,000 people who signed up for the study. They didn't mention money. Then they said them the 200 that they chose 200 from 6 countries. Some were first, some were third world countries. And they said, these are the rules of the game. You're going to be getting $10,000. What we want you to do is we want you to spend your $10,000 within 3 months, and you must only tell us how you spent it.
Sure.
Not ask, but just tell us how you spent it, and that's all. Half the group they asked to put on their Facebook pages and other social media, and others said don't. They just didn't mention that they should. The result of that experiment were that not one person kept more than 1/3 for themselves.
Sure.
They all gave 2/3 away. And there was absolutely no difference between those who put it on social media and those who didn't. And the indication from that was generosity is not necessarily inspired by the fact that other people will know about you. It can happen anyway. And they've got lots of examples of generosity, of giving money like these ones, but they also talk about other forms of generosity. One of the ones that caught my fancy most was a hairdresser who, on his way home, he seemed to bump into the same homeless man often. And so he said, he happened to have his scissors with him, whatever, and he said, come, let me give you a haircut. And he gave him a haircut, and they got talking. And he's subsequently been giving homeless people haircuts, and then what he does is he publishes their stories in their own words. And he says that there's a huge gift to people when you just recognize them, when you show them some attention. So this idea of being generous has a lot of different ways of doing it. And this idea, and it is infectious. You know, when you do read about things like that, you do want to do it. And there's enough studies done on how that. There's a Gallup study, which is 250,000 people. And in their Gallup study, they asked people, had they donated money in the last month? Those who had donated money were much happier than those who didn't.
Sure.
Now, you could say that's not causation, that's just correlation. But there was another study done by Elizabeth Dunn on toddlers. They found that when toddlers give a sweet to another toddler, they are happier than when they get the sweet themselves. And so we see that this generosity and this wanting to give is a very human thing.
It's interesting because it also suggests that if you're in an environment where people give things, it's easier to give yourself, perhaps.
Absolutely. Yeah, absolutely. I think that's what's important is that this now we can see these we hear about it on the radio, we see it in all places, and this generates a lot. And we're in South Africa. We've got a frightening statistic of people who don't have enough food, and we need to worry about this generosity as South Africans, probably the rest of the world as well. It's our issue, and I thought this was a particularly important thing because of that. What is interesting is you would imagine that human beings don't have an instinct to generosity. You imagine that we should be grabbing everything for ourselves. But one of the reasons why we have that instinct for generosity is because if you're sitting around the tribe and you'd had a good kill and there was extra food, you gave it to your neighbor who didn't have a good kill.
Yes.
Because you know that tomorrow night he'll be able to supply you with something if he has a good kill. So I think that this sort of stuff is part of our DNA. And this generosity, infectious generosity, is something that we really need to spend a lot more effort on, and there is money in it and people can benefit in all sorts of wonderful ways.
Did it change the way you see the world?
I think it did, very severely. I realized it did when I gave somebody a tip, one of this fellow, and I said, give some of that tip to somebody else. And I noticed that he actually put his hand in his pocket and gave it to the guy who was next to him.
Yes.
He didn't know I was looking at.
Yes.
I was behind him. I thought that sort of thing that you
sure.
do, it generates that sort of feeling in you.
That's very interesting.
Yeah.
Sure. Ian Mann, thank you very much indeed. The book is called, it's called Contagious Generosity. It's by Chris Anderson. I must just caution you, there are other books with the same title by a very different publisher. But the book that we're talking about with Ian Mann tonight is by Chris Anderson and it's called Contagious Generosity. He's also the person who really curated the TED Talks, the impact they've had. Ian, good to see you. Thank you very much indeed. Ian Mann is the MD at Gateways Business Consultants. In a moment, Sandile Zungu. We'll talk to him about his journey with money.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
23 minutes now to 8 the time. So today on The Money Show, we talk to someone who's played a role not just in business, but has also played a small role in politics and at one point in the intersection of the two. And don't get me wrong, I say this with approval. I think that if business wants something from government or from a governing party, should say so explicitly. And he played a big role in that. But he's also tried to give back hugely to the community that he comes from. I'm talking about Sandile Zungu. He's the founder of Zungu Investments, played a big role in the Black Business Council over the years. Sandile, good evening. There's a position of yours that I'm forgetting. It's chairman of a football club. What's its name again?
AmaZulu Football Club. Also told my Peshanko Nyone Shazana Bonabula, Malamba de Panching in Opozal, Masha Munten Pendele. Hey, Usutu. You have tickled me, Steve.
I might have done it deliberately, Sandile. It's wonderful to talk to you again. And thank you for taking the time. I really appreciate it.
Thank you so much for having me here, Steve.
The journey started in Umlazi, if I recall. I'm presuming the 1970s, the 1980s? The Umlazi you were growing up in at the time, I mean, what was that like, the family, the community around you?
Well, it was a classical working class neighborhood. As I maintain, it remains so. When you talk about we're a product of a village conspiring, that's my story. You know, the society, the community I grew up in, conspired to create a path for me to where I am now. That's why I always refer to myself as Mbana Semlazi or Moshasha, the boy from Umlazi, because I hold the township in reverence. So the family I came from was a very Christian family. We prayed together. And my mom will shepherd us to Sunday school every Sunday, and therefore the access of the school, the church, and the community was integral in my upbringing.
You say, Umlazi. From people I've heard from who live there. In some parts of it, I think haven't had water for a long time, if I understand correctly, and it's still very difficult in many places.
Well, it was difficult even those days. There were days when we would go for days without water. And we almost were content with that. We knew that if our section was deprived of water, we'll return from school, push our wheelbarrows to the next section and get fresh water from there. I think nowadays it's possibly inexcusable that a township as huge as that will be running without water for weeks on end, months at times, and with infrastructure crumbling, almost like unabated. So in part, it's difficult to compare the two. I think the situation, in my opinion, humble opinion, has possibly gotten worse over the years.
It's incredible. So the community conspired for you, and at some point you ended up, and we all know this about you, you ended up at Hilton. And how did that happen?
I was one of the academically gifted students from my lower primary school all the way to high school. And I was offered a scholarship by Shell to do engineering. But first I had to go to Hilton College as part of my bridging year to do post-matric. It was a very defining moment for me. I witnessed contradictions, where I came from was an environment of want, and I found myself in an environment of abundance. But the conscience in that community among teachers, academics, administration, and even fellow learners was such that the blow was minimized. And to the extent that I've maintained a very good relationship with Hilton College over the years. My 3 sons went through that school because I hold the school in very, very high regard in terms of molding me to who I am now.
You still play a role. I understand, Sandile. I mean, people tell me things. You played quite a big role in when you were there. I imagine there was only rugby in winter. There's football there too now, and you might have played a bit of a role in the football stand.
Absolutely, I've been one of the contributors to the building of infrastructure. There was a time when my son was doing matric, and he was, I think, captain of a soccer team, first team at Hilton College, and they had a referendum. Where which involved the whole school to say, can soccer play in the rugby field? And the yes vote lost by a small margin.
Sure.
Which itself was a huge victory because the rugby community would have been dead seeing soccer competing at the Gilfillan. And I said to my son, look, when the time is right, possibly we must make sure that the infrastructure is built for soccer, dedicated to soccer. And that opportunity came to us probably 6 years ago when I was asked if I could make a financial contribution towards a field dedicated to soccer, complete with the stands. So there is a Zungu field, there's a Zungu pavilion at Hilton College, and it cost our family quite handsomely, but we've got absolute no regret because that field has become a major leverage from a marketing point of view for Hilton College. It's benefiting the community. Even Amazulu has camped there. Stellenbosch University, rather Stellenbosch FC, when they travel to KZN, they like to camp there. A few other teams have actually camped there and practiced for their matches, especially when they come to play against Maritzburg United, when it was still in the PSL.
Sure. I mean, bits of your life coming together in one place. So after school, you had the Shell scholarship and you had to go and study. And then I presume after that, you had to go and work for Shell?
I didn't have to work for Shell, fortunately. I say fortunately because when I was doing my final year, or rather third year, there was a few of us who were Shell scholars, and Shell was under pressure to disinvest from South Africa.
Oh, yes.
And there are a few of us who had been, almost like offered opportunity to work for Shell when they complete degrees, but they could not guarantee us jobs anymore. So they actually relieved us from that obligation. But then they said, Sandile, you are one of those that would love to hire you to work for us. And they offered me a job at, they had coal mines at the time. I think I was going to work in Emelo. And they said, look, my preference is to go and work in KwaZulu-Natal for Richards Bay Minerals. And I was under no obligation to work for Shell. And I selfishly said, look, I'm going to KwaZulu-Natal. And so my first employer was Richards Bay Minerals. I'm obviously very grateful that Shell, made it possible for me, but I didn't have to work for them.
At some point, you must have left a big company that you were working for, and you went to Zungu Investments, and you formed that. How did all of that come about? I mean, that must have been a big moment for you.
It was a transition. Steve, I worked for 6 years as an engineer, and I suddenly realized that actually it was not my first calling. I had completed my degree on that time of 4 years, and I did very well. But the engineering bug didn't quite bite me. And so I had to be realistic to myself and say, look, I'll prefer to do something else. Otherwise, I'm going to wither and I'm going to be demoralized. So I chose to do MBA at UCT, the Graduate School of Business, which I did full-time in 1995. And at that time, there was a flurry, a flood of merchant banks from overseas coming to South Africa to advise on unbundling of large conglomerates, focusing on their core business, Anglo being one of them, Genco being another. And so the combination of engineering plus MBA was in huge demand. Lo and behold, I was hired by Dr. Ndato Motlana, may his soul rest in peace, to work for his merchant bank, fledged merchant bank, which was a joint venture between Nail and DLJ Bliard, or rather DLJ in New York. And that's when I got exposure to almost like mergers and acquisitions. And I was fascinated advising on the acquisition of Jonic by the National Empowerment Consortium. Among my clients, so to say, was the president, Cyril Ramaphosa, when he was at Nail, where people like Phuthuma Nhleko, who at the time was with Worldwide Africa, Professor Wiseman Gushu, just to name a few, Arin Chanley from Mine Workers Investment Company. These are people that I'd grown to admire. And suddenly I was in a situation where I was advising them. The love for things transactional then grew. And fast forward to 2002, and after having worked for the trade union investment company, which I founded, Saru Investment, I said, let me just do it on a proprietary basis. I founded Zoom Investment Company as Zico in 2002, and it's been going on for 22 years.
Sure.
And I've never looked back.
No. My money, we're talking to Sandile Zungu, president of Amazulu Football Club and founder of Zungu Investments. In a moment, we'll ask him a little bit more about his journey with money.
The Money Show with Stephen Crotters is brought to you by ABSA CIB, proud host of the ABSA Champagne in Africa Festival 2024. ABSA is an authorized FSP and registered credit provider.
My money tonight, talking to Sandile Zungu, president of Amazulu Football Club, founder of Zungu Investments. Sandile, I think the first time you and I met was probably when when you were leading the Black Business Council, and there was a lot going on at the time, leading up to the 2012 ANC conference, if I recall. And one of the things that you, as the group, wanted was a Ministry of Small Business Development. And I always thought at the time it was important because for the first time we saw a business group lobbying the ANC for something, and we forget how dominant the ANC was at the time, and actually getting it. I mean, it seemed to me to be quite important for business at the time.
No, it was very important. We had always felt that the most credible entry for black people in business was through the SMME sector, and there was no ministry or department which was almost like single-mindedly focused on that interest. And it was important for us to lobby for the creation of this ministry. And it indeed was created. I'm not so sure over the years if its efficacy is something that we can be entirely proud of. But it's almost like it's progress notwithstanding. And indeed, during that time, there were a lot of things that we wanted to have, which some never happened, and some took a very long time to happen. The Preferential Procurement Act, I think, which was passed just recently, almost took a decade for the Black Business Council to lobby for the law into existence. I'm not so sure if it's now a damn squeak or it will deliver on the mission, but certainly something that we lobbied for. And we were listened to, and we're very glad that we actually upped the ante, that the discourse must not be dominated by big business issues only.
Sure. I mean, I was going to ask you directly about the Small Business Development Ministry because, there was an interview the other day on another outlet where the current minister, Stella Ndabeni-Abraham, started off and answered the question by saying it was still a young ministry. It was still sorting out its modalities. It's 10 years old.
Well, I think it's a very old ministry, and by now it should have got its act together. There's no excuse for it not punching at the level it should. Absolutely no excuse. And the issues that society is dealing with now, the malfeasance and food poisoning at spaza shops, you will expect that ministry to be on top of issues, on top of things, to make sure that such never occur. I know it's not their exclusive preserve to deal with matters of food health, but certainly they have a huge role to play in that area. And I think anything older than 2 years at that apex level where the resources are made available is very old.
When you look back, Sandile, on your journey with money, are there things you wish you had known when you were younger? Some people, when we talk to them, they'll say, I wish I had known earlier that I could be more confident. And you took some quite big risks quite early on, and that confidence is clearly important to you. I sometimes wonder if younger people now have more confidence or less confidence than generations that came before them. Difficult to know. But are there certain things that you think, gosh, I wish I'd known that when I was younger, or if only I'd done this slightly differently, it could have made a big difference?
Well, for me, focus is that one thing that if I could do it again, rebuild Zoom Investments, and maybe make my presence felt in business, I would be a lot more focused, pick the areas of great interest, and forget about, not really forget in the sense of being oblivious to what's happening around me, but not spend too much time and money and energies on things that are not important. I will have very early on maybe picked a sector or industries that I'll be focused on and deepen my knowledge and expertise and even networks in those areas, I think possibly I would have traversed twice the distance I have done if I had done so early.
I mean, direction's so important, and particularly to young people. And you can tell someone who's had direction. I think it's very hard to find direction, actually, for many people. And I don't blame them for that at all. This is not a comment on them. I just think, you knew early on that engineering wasn't going to grab you, but this did, and you were able to do it. For some people, nothing grabs them.
No, that's absolutely true. I mean, for me, the biggest and the best decision I took, not influenced by, for example, when I went to do engineering, I was influenced by the fact that my parents would never have afforded to send me to university, let alone to University of Cape Town. So I took whatever was offered as a scholarship, and I excelled in it. But I discovered that was not my first love. And that realization very early in my career, was very important, because I said I've spent 6 years working here, add to that 4 years studying this degree, add to that another year preparing for it, 11 years. Why do I abandon it? I said I have to, for my own sanity. So in other words, people have to take bold decisions, not in a haphazard manner, and not in a hasty manner, but certainly think through it, but take those decisions. They say indecision is the biggest weakness in leadership. Even in terms of personal leadership, being unable to decide sets you off big time.
Yeah. And I suppose part of that is also, I think we all know people that we can see have done very well in life. And we don't always know what it was really like for them. We just see the kind of public success. I don't know if we always know a person in a whole way.
No, that is true. Absolutely true. I can talk for myself and say, I've got many scars. Scars of betrayal, scars of being deceived, scars of defeat in battlefields. Not all of it is negative, but what have I learned from that? I've learned a tremendous amount of learnings from that. And that has all molded me to be who I am, and to shape my outlook, and to make me even more single-minded in things that I'm pursuing. So I really believe that people must embrace the good and the bad that happens around them, that happens to them, and march on, because no life is a straight line.
I suppose so. Sandile Zungu, Gyobonga, thank you very much. I've really enjoyed talking to you again. It's been a long time, and thank you for sharing your money journey.
And once again, thank you for inviting me, Steve Vovo. Good evening to your listeners as well.
Sandile Zungu, president of the AmaZulu Football Club, founder of Zungu Investments, done many other things, of course, in his life. Very, very interesting life that Sandile Zungu has led through a very interesting time.